All right. So this is gonna be a video over my day trading strategy. Um, in this video, I'm just gonna be basically breaking down how I view the market and how I take my trades. And it's gonna I'm gonna have rules included and what my what my models are. So to get started, let me open up this view. Okay, so my first step when open up the charts is to understand the higher time frame narrative. So what is narrative? Narrative is the most important aspect of technical analysis. It is the understanding of what prices is doing at the moment and why it should behave in such a manner. So think of it like on the higher time frame, are we, did we create a daily fair value gap, and are we going to respect the daily fair value gap? And did create, even creating that fair value gap is narrative. Like, when we create a fair value gap, that just means that, hey, we're very strong in either, whether it's a SIBI or a BISI. And yeah, it's basically narrative is asking you what is prices doing, when should prices be doing such a thing, and why it is behaving in such a manner. And my definition of higher time frame is daily, weekly, monthly. The daily, weekly, and monthly time frame are my definition of higher time frame. Having the higher time frame narrative in mind allows me to understand the larger picture. It allows me to understand what the overall trend is for the market. But that is needless to say that if the higher time frames are bear, or like, let's just right now the higher time frames are bullish on NQ, but that doesn't stop me from taking shorts on the lower time frame models, such as the 4 hour, the hourly time frame, and the 50-minute. If we are expanding in one direction on the higher time frame, such as like currently right now, then I can trade expansion models on the lower time frame, meaning I can trade with the idea of having a high time objective, such as daily highs and lows, weekly highs and lows, and monthly highs and lows. However, once we take out a higher time frame objective, or if we are in consolidation on the higher time frame, then I would trade the lower time frame models. Like I said, the 4 hour, the 1 hour, and the 50-minute time frames. Trading lower time frame models means that I will only be targeting lower time frame objectives. So the lower time frame objectives being like session highs and lows. Sessions or like Asia, London, New York AM session, lunch session, New York PM session, hourly highs and lows, and even 15 to 30-minute highs and lows. All right. So an example of of what I just stated in my first step is when we, let's just say we came into a daily fair value gap and we get a pretty bullish, so prices retraces back into a daily fair value gap, then I would hop onto the 4 hour time frame. And if we have a 4 hour time frame, and we have a reaction to that daily fair value gap on the 4 hour time frame, and let's just say we create a really big up close candle, and we can anticipate for that 4 hour high to be ran, then I would hop onto the hourly time frame, the 30-minute time frame, the 50-minute time frame, and look on those time frames for like a fair value gap for prices to retrace into and take out that 4 hour high. And then if we're expanding on the high time frames like the daily, weekly, then I can target weekly highs and lows, the weekly high, the daily high, or the monthly high. And it's all fractal. Prices is fractal. So if we if we trade back into a 4 hour fair value gap. And then on the hourly time frame, we have like a really big wick candle, and we can target the candle's high. Then I would go on to the 15-minute time frame or the 5-minute time frame to find fair value gap for prices to retrace into. Then take out the hourly high, and then etc. And we can do that the same thing on the hourly time frame too. So if we retrace back into a 1 hour FEG, we get a reaction to it on the 15-minute or the 30-minute time frame, and we get a very bullish candle closure on the 15 or 30-minute. Then we can target that 15-minute high or 30-minute high, and use the 5-minute, 4-minute, 3 2 1 minutes to find fair value gaps that will support the idea of us taking out that 15 or 30-minute high. So after we noticed the power of 3 and formulating, I don't know why I said that. Let me just fix it. After noticing the power of 3 and formulating an idea of whether the high or low will be taken, we will go to the lower time frame relative to the power of 3 time frame. So power of 3 time frame being the 4 hour, the 1 hour here, and we would find supporting fair value gaps that are in confluence of taking that high or low. So an actual trade example of this is during 4/19/2024. So April 19th, 2024. You can check this on your charts as well. But this is just a screenshot, so I can't really play around with it. But previous day low is the overall higher time frame draw liquidity. So on the higher time frames, like I said, on the daily time frame, the weekly time frame, and the monthly time frame, we are drawing towards this previous day low. But I'm trading the lower time frame models, so I have a lower time frame objective. So my lower time frame objective is only to take out this previous hourly high. I'm not targeting a retracement back into this fair value gap, or completely reverse back into this high right here. All I'm targeting is this previous hourly high. That is my lower time frame objective, because I have an understanding and I know what the higher time frames are doing. We are going to attack previous day low, but like I said, as day traders, we are given tons of opportunities daily for setups like these to occur. So even if we are continuing lower on the higher time frame, that doesn't prevent us from taking longs on the lower time frames if we know what the objective is, and if we stay disciplined and aren't too greedy to squeeze more than what the markets is willing to give. So like I said, we are bearish higher time frame, but on the hourly time frame, we had, look at this closure, we had a 1 hour power of 3. We can anticipate for this previous hourly high to be taken just from this wick, and it looks like prices will likely retrace back into this fair value gap here, and then maybe if we respect it, then we continue lower from this previous day low. So with that in mind, my objective for this lower time frame model is to take out previous hourly high. So what do we do after having an objective in mind? We go on to the lower time frames to find a supporting idea, or a supporting fair value gap that will support prices to take out the previous hourly high. So a time frame relative to the hourly time frame is the 15-minute time frame, the 5-minute time frame. So I go down to the 15-minute time frame to find a fair value gap that will support the idea of us taking out previous hourly high. So on the 15-minute time frame, we created a fair value gap. We closed above this 15-minute SIBI, and then we didn't take out the objective yet. So we create a fair value gap. Notice how we didn't take out this previous hourly high yet. So we went very close to taking out this previous hourly high, but we didn't. And then when we retrace back into the 15-minute fair value gap, and then we end up taking out the previous hourly high. So you can set your trades at this entry here, stop loss at the wick, and in targets, you can take out, partials at this previous hourly high or this wick right here, and then you can, that's up to you, that's for a different video. But as of right now, just understand that we are trading the lower time frame models, not the higher time frame models. So that's step one. So you have to understand the objective, and you have to go to the lower time frames relative to that power of 3 time frame. So the power of 3 time frame I have on this trade is the hourly time frame, and then I go on to the entries, the lower time frames, which would be the 15 or 5 minute. And in this trade, I went onto the 15-minute time frame. My next step for when trading is you actually have to understand what power of 3 is. You need to ask yourself, when looking at every candle, is will prices take out this candle's low or this candle's high with the next candle? So look at this, like going back to this example, when you ask yourself, hey, are we going to take out this candle's high or this candle's low? So in my head, I ask myself that, are we going to take out this candle's high or this candle's low? I'm thinking, okay, we're going to take out this previous hourly high. So then we would have to go onto the lower time frame relative to that power of 3 time frame to find fair value gaps that support our objectives. My most common time frames, it should be the most common time frames I use for entries are the 15-minute and sub 5 minutes. So 5, 4, 3, 2, 1 will be the time frames for my entries mainly. This is because I am an intraday trader scalper, / scalper, so I am usually trading the lower time frame models. But that wouldn't, if you're a swing trader or a position trader, then you can take hourly entries, and have a higher time frame objective. But as for me, I'm an intraday trader, so I trade the lower time frames. And I really do hope that this is this is a very simple, very nonchalant way of trading. I shouldn't say nonchalant. Very simple, straightforward way of trading. And let's just say here, prices. When you have this idea in mind, so we're gonna take out. So you have this idea that we're gonna take out the previous hourly high, right? And let's just say that prices doesn't even retrace back into this fair value gap, and we take out this previous hourly high, and you weren't able to take an entry. That's completely fine. Even if you didn't, you couldn't take that entry, you still had this. You're tape reading. You're following your rules by, you would only take that trade if prices retrace back into this fair value gap, and if we don't, then we don't. There are tons and tons of trades that occur every single day, every single week, every single month, and there will be, there's in any conditions, if you just understand what the objective is. The main thing is that you are not targeting higher time frame objectives with lower time frame models. You should only be targeting lower time frame objectives using lower time frame models. So you can't use a lower time, you can't use a 1 minute model and target, a weekly high. That is not how you should view the markets. Everything is fractal, but you must understand that, a 1 minute compared to a weekly candlestick chart is, the prices are the same, but structure wise completely different. There might be only one fair value gap in that weekly structure, but on the 1 minute time frame there could be hundreds and hundreds of fair value gaps. All right. So with that, that's step two. And some of the rules that I do have for the style of trade, the way I trade and my models, is that the first rule is if there is no displacement, I am not taking trade. So let's just say that I have the idea of taking out this previous hourly high, right? And I go on to the 15 minute, and let's just say there's no FVGs there. There's no displacement. I'm not going to take this trade. I just won't. If this wick, like if we didn't even have this fair value gap, then I don't, you know, I have the bias that, hey, we're probably going to take out this previous hourly high, but I'm not going to have an entry. You don't want to force an entry onto a model if your your entry pattern, that PD array that that you like, isn't present. So if this fair value gap was not here, I'm not taking this trade, even if I have like 99% certainty that we're gonna take out this previous hourly high. And you have to stay disciplined to follow that rule set. And like I said, having rules prevents you from, it's not taking dumb trades, but it prevents you from being too free. Like when we think of traders, we think, oh my gosh, we're gonna have free time, we're gonna have freedom, financial freedom, but that's all social media. You have to stay. You have to be very disciplined to your rule set to find success in this industry, and this is and you have to stay disciplined throughout your lives as well. So if there was, like I said, no FEGs, no displacement, no trade. So, but this trade we did have an FEG. So, and we also closed above a SIBI. So, there's confluences for me that, hey, we're probably gonna take out hourly high. But so first rule, no displacement, no trade. Meaning if there is no supporting fair value gaps on the lower time frame to help take out the previous previous candle's higher low, then I will not take that trade. All right, my second rule is that I will wait for candle closes. It prevents me from getting wicked out of a trade and provides for a clear narrative. This one is almost like a must for me, because when I trade power of 3, I'm basically trading the very next candle. I'm not trading during the candles, that candle's power of 3. If this candle was still trading right here, like let's just say like this candle is still trading and hasn't closed yet, and we're still trading, we have on the hourly time frame, we still have 30 minutes. If this hourly candle looks like this and we still have 30 minutes left, I'm not taking any trades, because we could just retrace back up to here during the hourly time frame and just completely go down lower. I want to wait for candle closes. It prevents me from getting wicked out, or having false narrative or a false understanding of what prices would do. Because most of the time, we can do something like this, like, oh, are we gonna respect this consequent encroachment? But we wicked it, like in this example here. But look at the way we close. We close right above the consequent encroachment. Waiting for candle closes is you're being patient. You're not rushing, because you don't want to rush into a trade. You don't want to be it just helps you. It prevents you from getting wicked out. It prevents you from having not a false narrative. But yeah, so that's my second rule. So if I have a 15-minute power of 3, I will wait for that 15-minute closure, and when I say I can only enter after 15:30, 45 in the new hourly mark, like the 00, that's basically the 15-minute closure time. So we close at 15 on the 15-minute candle. We close on the 15, the 30-minute, the 45, and the 00. On the 30-minute power of 3, I will wait until prices close at the 30-minute mark and the 00 mark, because that's when we close, And like I said, on the 1 hour power of 3, I can only enter on the 00-minute mark, because I'm not trading. If I'm trading a 1 hour power of 3, I'm not gonna enter that trade, at 10:30 or something like that. It just prefer candle closes. Yeah, so that's my second rule. So second rule is wait for candle closures. Third trade, very important trade rule that I have, a trading rule that I have, is I will not take a trade after an objective has been met, or take a trade without having a clear objective in mind. If I don't have an objective in mind, like if I don't have a power of 3, like if I don't have, that confidence of us taking out a previous hourly high, then when I take that trade, I'm going to be, very, very shaky, very nervous. Oh man, it's gonna reverse on us, and it's going to impact you even more if you take a loss and you're like, oh man, I shouldn't have taken that trade. It prevents you from unnecessary losses. So every time you do enter a trade, always have a clear objective in mind. And if if that London low or London highs that you've been targeting the whole day has been taken, then don't try to bull rush into a trade because, oh my gosh, I knew London highs were gonna get taken, but my entry pattern never showed itself, so I wasn't able to take a trade. Can I just rush into it and take out, try to squeeze more out of that lemon? That's the wrong way of viewing prices. So, just keep in mind, do not take a trade if you don't have an objective or the objective has already been met. There will be tons and tons and tons of trade models, whatever, during the day, during the week, during the month. So there's no need to rush it. You gotta be patient. And you always remember, take partials. Take partials when lower time frame has been met if we are trading in a expansion model. So what I mean by lower time frame objective. So let's say on the daily time frame, we know we're gonna take out previous day low, and the lower time frame, we're also continuing lower. So external draw liquidity equals internal draw liquidity. And let's say we're trading this off of the 1 hour power of 3. Take partials at the 1 hour of, we take partials at the 1 hour power of 3, and then still have your limit orders set at whatever that a higher time frame objective is, if that's being daily lows. Remember, partials pay. ICT states that, and it's very true. You don't want to see your trade completely reverse on you, and you didn't take any partials, and you didn't move your stop loss, so you can mitigate risk. My fourth rule is I will allow myself 2 chances for a model. So if I get stopped out once trading the same model, but let's just say I got wicked out, then I can allow myself a second try on that. And if that second try fails again, I will not trade that model again if it presents itself. Even if it allows itself for the third time, I am not taking that model. The fifth rule is do not trade the last 30 minutes of a 4-hour candle. That's very, very, very important to me, because during the 9:30 open, I don't trade that first 30 minutes of the open because it's very volatile, and I prefer waiting for the 10 a.m. news. So I just applied that rule set throughout every 4-hour candle. So at 1:30, after 1:30, I'm not trading. I will wait till 2 p.m. and then I'll start looking for trades again, or models. But it just prevents, unnecessary losses like a state. And because I have complete, I know the markets will allow um, itself, it will allow me to take a trade, and I'm very certain that there will be models the next week, the next day, the next month. I don't. There's no need to chase it. There's no need to force any trades during that specific time. I know that prices aren't going to be very sweet to me. It aren't very nice. So those are my 5 rules. First one: no displacement, no trade. Wait for candle closures. Don't take a trade if you don't have Don't take a trade if you don't have an objective in mind. Give a model 2 chances, and don't trade the last 30 minutes of a 4-hour candle. So with that, that is the end of my day trading strategy. If you guys want, I would do a separate video to just go over more trades, and so you guys can visualize the way I view prices. Because this PowerPoint was just all majority of it just words and me explaining to you through just a PowerPoint. If you guys want, I could dive into the charts and explain it a little bit more clear with an example in mind. But I will end off this video with a trade that I didn't take this trade. Let's be transparent. I didn't take this trade. I was back testing, and this is just like one of the trades that God forbid, I don't know why I would be awake during the London session, but it just happened during the London session. And when I was back testing, I just saw this trade, and I was like, hey, this is actually a pretty A+ setup. And it kind of fits in with the video that I'm making as of right now. So I'll just go over it with you guys. So this trade actually occurred today, or well, it occurred June 21st, but this is the night of. So coming into today, I was actually quite bearish on the higher time frame. So looking on the daily time frame here, we had a daily power of 3, so we can anticipate for us to run this previous day low here. And so I go on to the lower time frames. I go into the 4-hour, the 1-hour, relative to the daily time frame, because I have a daily time frame objective. So I'm stating, okay, so if we can, if we retrace back into this 4-hour FEG, we should respect it and take out previous day low. And we actually did that during the London session. So on the London session, we retrace back into this 4-hour FEG here, and we have a reaction to it. Notice, I went from the daily power of 3, and I went to that 1-hour power of 3. There's, I don't know if it clicked with you guys there, but so I have a daily objective. I have a daily draw liquidity. I have a higher time frame draw of liquidity. So that is being the daily low. And I have a 4-hour PD array that I can see prices retrace into and attack that previous day low. So we retrace into a 4-hour PD array. So what's next after that? 4-hour PD array. We should see a reaction on the 1-hour time frame, 1-hour PO3. So we get just that. This candle right here is the 1-hour candle that retraces back into this 4-hour fair value gap. And on this 1-hour power of 3, what can we anticipate for prices to do? We can anticipate for prices to run this candle's low and leave this high intact. So now I have a higher time frame objective aligned with the lower time frame objective. That's my expansion model. So that means that I can, have even lower targets than just this hourly low. I can target, previous day low, Asia session lows, and so I went onto the 15-minute time frame, and I went even, I just kept turning that microscope. I went onto the daily, turned it again. I went onto the 1 hour, and I'm like, okay, let me go once more. I went onto the 15-minute power of 3. So notice how this candle's low actually aligns with this 15-minute low. So with that in mind, we do have a 1 hour / 15-minute power of 3 in mind. So thinking to yourself here, we had this 15-minute candle closure. Are we expecting prices to do on this very next candle? Are we expecting prices to run this candle's high? Or are we going to anticipate for prices to run this candle's low? We are anticipating for prices to run this candle's low. That's what I had in mind. So with that in mind, this candle's low here is the draw liquidity on the lower time frames. This hourly candle low as well. So it's basically 15-minute / 1 hour low that I'm targeting for my partials. So I'll just go back to my rules. So we have a 15-minute power of 3 on mine. So where do I go for my entries? The 5, 4, 3, 2, 1 time frames for my entries, right? So I want to find a fair value gap that supports the idea of us taking out that 15-minute low. Now, let's go on to the 5-minute time frame. Do we have a 5-minute FEG on here? No, we don't have a 5-minute FEG that supports the idea of us taking out this low, this 15-minute low right here. On the 4-minute, we actually do. So we can take this entry right here to target this 15-minute low. So this would have been a 0.79, not even a 101, but because of the way I trade, it's the win rate here is actually a little bit higher than just a 50%. So even we can go on to the 3-minute, the 2, and the 1. So I actually take my entries on the 3-minute because I don't know why, but the 15-minute shows these 15-minute candle indicator shows on my 3-minute, but on the 4-minute it doesn't show. So you can have the stop losses here, and we can have partials taken at the 15-minute low, this 15-minute low right here. And then once we take out that low, we can move stop loss to break even, and etc. etc. So yeah, that's basically the breakdown of that trade. We end up taking out Asia's lows, and if you look on the 15-minute time frame, we actually do end up running previous day low here, and we can just you can just tell Asia's lows we're gonna probably be taking, so we can have partials taken here, trades to break even, and then let prices do its thing. If we retrace again, then we retrace again. The one thing I do want to note is that on the 1-minute time frame, we do actually so like I said, I waited until the 3-minute. I usually, when I'm trading the hourly time frame and the 15-minute time frame models, I'm waiting until for the 15-minute models, I'm waiting for the 15, 30, 45, and 00 open. And on the hourly, I'm waiting for the 00 open. So I waited until the 3 a.m. open, 300. We opened up, we wicked into this 3-minute fair value gap, and we just went lower. So we took out hourly / 15-minute low. Stops would have been moved to break even. And we can have Asia's low as the targets, and previous day's lows too, if you're trading the high time frame models. Yeah, is there anything else I do want to talk about? Not really, actually. Yeah, trades. yeah, that's basically it. I do okay. Yeah, I do okay. I do have something to say. If you can find a trade idea that aligns with the higher time frame objective, the higher time frame, higher time frame, um, draw liquidity match with external ex- external draw of liquidity, and internal draw of liquidity is the same thing as well. If they match up, then the trades are that trade is more. It allows for more movement. Um, if that makes sense. But yeah, with that, I'm probably gonna wrap up the video. It's kind of long. The video's quite a long video, but yeah. So that is my day trading strategy, the way I view the markets as a complete. Um, there are a little bit more, things I think about, like um, IFEGs, SMTs, and such as that. But that's for another video. But with that, I'm done for the video, and I'll catch you guys later in the next time. Be safe.